Tata Technologies is the next company we are focused on. We have Warren Harris, Managing Director and CEO at Tata Technologies, joining us now to talk to us about business and how things are looking. Mr. Harris, thank you very much for joining us as always. Prashant this side. I mean, you derive a fair portion of your revenues from the auto space. And of course, the sector has been reeling with significant uncertainty due to tariffs. There is slowdown due to competition and EV incentives, etc., being rolled back as well. Could you tell us how are your clients behaving amidst all this uncertainty? Are they holding back in handing out new projects, etc.?
Well, I think it's been a choppy environment over the last 12 months. You know, certainly here in the US, the extreme policy positions that the Republicans and the Democrats were taking made for very difficult investment environment for our customers. The lack of clarity up until November, I think, was very distracting for many of not just the OEMs but also the tier ones in Europe. You cited the runoff of incentives. We've also got the threat from China. So it's been a difficult 12 months, and yet I think at the beginning of this year, despite the tariff kind of overhang and the lack of clear policy clarity here in the United States, I think the environment is starting now to present an investment platform against which, again, we're starting to see the green shoots of improvement. So, you know, whilst it's been a difficult last 12 months, we are hoping that the improvement that we've seen January, February, and March will continue through this calendar year.
Got that point. Mr. Harris, let's talk about the automotive segment in particular, which it was, of course, subdued in the third quarter. Is there any improvement so far in Q4, and what's the outlook for FY26?
We're seeing momentum build, and so we are expecting to finish the fiscal year well, and we are seeing the opportunity for momentum to build in the new fiscal year. We are relatively bullish for not just automotive but for aerospace and industrial heavy machinery. The growth rates of the addressable space that we are focused upon are double digit, and we expect to intersect with that, and we are hoping that as we move into next year, you know, many of the sort of headwinds and the distractions that we've had to grapple with will be mitigated, and we'll get back to where we were, you know, FY23 and FY24.
Well, you know, the highlight has been the double-digit growth that you are targeting in your addressable market. This across three segments: auto, aero, and industrial machinery. And add to that, the question is, this double-digit growth in TAM, does it translate to double-digit revenue growth as well? Will that be higher than that?
Well, when I refer to the 10-12%, I'm referring to auto, aerospace, and industrial heavy machinery. The addressable space for us is just over $200 billion, and that space. So those are the verticals that we are targeting. Those are the verticals that we are focused upon. That space is expected to grow somewhere in the region of 10-12%. That's what Zinnov have confirmed. That's what other industry watch organizations are asserting. So we think that collectively that will provide the type of tailwinds that will support our return to not only growth but double-digit growth as we move into the new fiscal year.
All right, Warren. So double-digit growth as you move into the next financial year. Is it possible for you to break that up into aerospace, industrials, and automotive?
Well, we're expecting, because we're coming off such a, you know, you cited the percentage split of our business. Industrial heavy machinery and aerospace is a much smaller part of our business than automotive, and so we expect percentage growth in those areas to be much higher than what we're seeing in automotive. But we are expecting momentum and growth to sustain across the three verticals that we are targeting, and we are, our confidence is reinforced not just but through the research that's come from the industry watch organizations, but we're seeing it from our customers as well. We're seeing the order book starting to grow. We're starting to see decisions made, and that's informing the type of confidence that underpins the numbers that I've just shared with you.
All right, so growth momentum seems to be coming back. So then let's talk about margins as well. You're at about 18 to 18.5% right now. The company has stated in the past the goal is 20% margins. Do you think that you'll be able to get to those targets maybe next year?
I think in terms of margins, you're absolutely right that our aspirations, our North Star as far as margins are concerned is over 20%. We expect to make improvements to margins next year as the business scales, but I think it's likely to take several years before we get to the 20% mark.
There is so much tariff uncertainty, and you believe that it's not going to be a drag on your growth in this year. I mean, what is it that makes you confident?
Well, I anticipate that the lack of clarity that we've got as far as tariffs are concerned will resolve itself in the next month to 6 weeks. I think that there is clear direction in terms of where the current administration in the United States wants to go, and I think as they're implementing the changes that they have made clear that they want to make. Whether we like the tariffs or not, it'll at least provide clarity in terms of the market conditions. And I think it's clarity that's more important than whether we have tariffs or not. I think if the tariffs present themselves as is being suggested, then the market will adjust and investments will be made. And so I think the current uncertainty is likely to be short term, and I think medium to long term we'll know exactly where we stand.
Absolutely. The world awaits for more clarity on that issue of tariffs. Thank you very much, Mr. Harris, for joining in and giving us a sense of the business. We do